Welcome back to the Dividend Diplomats YouTube channel, guys. You've got your boys, Bert, the man over there, the legend, and Laney, the Dividend Diplomats, the best dividend investing channel here on the network, guys. Not just YouTube, the network, all social media, guys. We are blazing trails. We are Ric Flairing the out of this right now.
Right. But before we go into this video, subscribe to the channel. Give this video a thumbs up.
Let's
Help your
go.
boys get to 18, 19, 20, 21, 22, 23, 24, 25,000 subscribers. Let's blow this out of the water because we have two very undervalued stocks in their sector to talk about.
Yeah. Two headliners, two stocks that you would think would have bad earnings had solid and great earnings. Two stocks that are deeply discounted, trading below not just book value, but trading below 10 times forward earnings. Actually, trading below 8 times forward earnings, both in the same industry. Bert, does this get you salivating about these dividend stocks or what?
It does. I'm ready to go. I'm excited because who doesn't love buying great undervalued dividend growth stocks and growing your passive income? Who freaking doesn't like that, Laney? You tell me someone that doesn't like that, and we'll have a nice little conversation with them. We'll get
Hey,
my Uncle
Jerome
Tony
Powell,
over there.
Jamie Dimon. Yeah, get my Uncle Tony, my
Yeah.
cousin Johnny, my cousin Vinny, Big Nick, Little Nick, Big John, Small John. Let's go.
Yeah.
But
So what?
but yeah, we're talking about two beasts in the banking industry, actually.
Hmm?
You know, banks do very well actually in a rising interest rate environment. They might have some early term because cost of funds usually go up quickly, but then that yield on their loans and investments starts climbing the ladder. You might get to that
So
fifth rung fast in a ladder match, but in time, that loan yield will over trump it.
that's right. And there's another key piece to that. You're saying both are rising, right? You have your interest rate and your loans rising, and the snap of your finger, the deposits trail it, but they rise too. What's going to happen the minute interest rates start decreasing, Lanny?
What
You
goes
think
up fast comes down fast as well.
that what's not going to come down as fast either? The
Those
interest,
long-term
yeah,
loans, baby.
the interest on the loans are going to remain higher than the interest rate they're paying out in deposits. So they're going to get this golden period of high net interest margin, net interest income, all the good stuff for banks.
The management of the balance sheet has been so key, guys, and we're talking about Bank of America and Citigroup. Ticker symbols BAC and C here, guys. They recently released earnings. We're briefly going to talk high level for about a minute on each. We're going to go into the dividend stock metrics on each, and we're going to see here which bank stock you like out of these two. We're not talking JP Morgan. We're not talking Wells Fargo. You know, we're talking about some of the other two bigs that rarely are discussed heavily here.
Yeah, you like Uncle Tony better or you like cousin Johnny? Which one is it? Which family?
Grandma's pasta, you like Nonna Gina's, or you like cousins, over there? Come on, let's get into this. So Bank of America, though, Bert, came out. Net income was up 11% year over year. Net income of $8 billion, almost EPS of 90 cents, up 11%. Revenue also improved year over year to 25 billion. Their net interest income, which is interest income less interest expense, was up 4%. So its interest income is rising faster than interest expense. So just keep that in mind to
Yeah.
14.4 billion right there.
But it's not just the interest income that's growing too for Bank of America. It's that non-interest income, all those fees, all
Oh
the
yeah.
trading revenue. They saw an explosion in that too. So their non-interest income is $10.8 billion. And that increased $51 million too. So asset manager fees are going up. All the extra stuff that banks love. Once you get a customer in, there are all the other fees and all the ancillary products you can sell, all the different ways to make money. Once you lock that customer in, they're executing on that strategy.
Yeah, think about your interchange and all the card swipes,
Mm-hmm.
credit card, the late fees, overdraft fees, statement fees,
Everything.
trust wealth and management fees. It is just that it goes on and on for Bank of America on the ways that they can scrape a penny from you.
Yes, that's right. And that's kind of the big thing here. So what happened with Citi though, Lanny? Because Citi is in a slightly different camp than Bank of America, right?
City, very interesting. So, you have one hand Bank of America, net income of 8 billion. Then you had Citi with third quarter net income of 3.5 billion, 20 billion. in revenues, trailing Bank of America is 25 billion.
Mhm.
Now, the big interesting piece here is their, common equity tier one, capital ratio here, guys, was actually at 13.5%. So their capital ratios are just climbing right now, which is very nice to see, especially with what happened with obviously Silicon Valley, Signature, First Republic, and you name it, all the bank failures that we've had earlier this year. So they're really improving their position with, it seems like, the regulators. But Bert, that wasn't even like the big news from Citi. They were doing a little bit of Undertaker tombstoning a lot of departments within the bank.
Yeah, I mean that's the challenge here with Citibank. That's been why it's been the dog of the big banks for so long, is because they've just been trying to reshape the business. The turnaround stories there. They've been selling off business lines to whoever wants to buy them, getting some cash in the door. But the CEO came in and said, "Hey, we're looking at the employees now," and um, there were a lot of managers. There was a right size. They were right sizing the employees, so they're cutting a lot of the upper to middle management. It obviously sucks from the people perspective, right? Because these are jobs and these are real people they're losing. But it's a lot of overhead for Citibank, and they're slimming down. They're changing the org structure altogether. They're streamlining the business, and hoping to unlock some of that value that's there.
And unlocking value, they are. I know the CEO, I think her name's Jane, continues to talk about it in the earnings release. And yeah, I mean, they sold the Taiwan consumer business. So
Yeah.
they've got some cash coming in from that. Uh, you know, Net income was up 2%, over prior year. Not amazing, but still up. You got to appreciate that with everything going on here. The biggest thing though is when we look at the book values of these two banks. Bank of America on one hand, book value is 32.65. Bank of America is trading at 26.96, so their stock price is trading below their book value.
Yeah.
And if you think that's a screamer right there, because that's deeply below their book value, we're talking, gosh, five and a half, $6 below their book value on 32.65, which is pretty significant.
I would
Um,
say.
but now this is when your jaw is going to come right through the floor with Citi. Because, Burr, what is Citi's book value and what are they trading at?
Cool. Citibank's book value is Um, it's much higher than what they're trading at. Their price to book is 0.4x. So well below. So if you think about it, 0.4x, if their price is $40 per share and price to book is 0.4, that would make what book value $100 per share, Lanny? Is that how the math works out?
That is how the math works out.
Yeah.
It is
So
book
if you thought
value of 99.28 per share recorded in their press release.
so there you have it. Price to book of 0.4, well below Bank of America.
Even if it was half of that, even if they were at 50 and they were trading at 40, I mean,
Look,
this is pretty amazing. So I
yeah.
don't know how many words I have right now for that.
No, but that's why management's so focused on the turnaround story. That's why they're talking about restructuring the company in pretty significant ways, having to thin out the layers and trim all the extra fat to help improve that ratio, unfortunately.
And guys, these two are yielding far higher than their 5-year dividend yield average. So, Bert, let's take them through the dividend diplomats banger of our stock screener metrics here: the price to earnings, the payout ratio, dividend growth, and dividend yield. Guys, again, these prices are as of October 19th.
Yeah, so let's do it. Let's check out Bank of America and that price earnings ratio 26.96, EPS 342. That's a PE ratio of 7.88, so below 8.
Below 8. This seems like a common theme lately. If
Yeah.
you haven't, check
Yeah,
out that
check out that
AT&T
last
video.
yeah, with our friends over at AT&T. Sorry.
And yeah, I mean, Bert, what's that payout ratio look like for BAC as well? Just rip through.
Yeah, all right, let's just keep going through. I'll just finish them all off here. Annual dividend 0.96, payout ratio 28%. 5-year dividend growth rate 12.24%. They've been increasing for 9 years ever since they restarted after the financial crisis. And that annual dividend is 3.56%. Sorry, the dividend yield is 3.56%.
Wow. Trading well above that 5-year average of 2.54%, down 20% this year, 20% since last year. Bank of America. Bert's grandma is very happy that those shares are in good hands with Bert.
It is. Yes, she is very happy, and they're just going to stay there. They're going to be in that portfolio forever. Let's go through C's metric here. Their price is 40.06. Earnings per share is $6.24. P ratio, it's lower, 6.42x.
You know, that's just disgusting. They pay 53 cents per quarter or $2.12 per year, guys. The dividend payout ratio is, just above what Bank of America is at, but it's only at 34%. Now, the big thing is they had a few years of pause after I think 2019-ish for Citi within the dividend growth era, but they have come back to resurge a dividend increase they did this year from 51 cents to 53 cents. So they're back with 1 year of consecutive dividend increases here. And even with years of zero, their 5-year average is still 8.51%. So that's just pretty insane.
It is. And their yield is over 5%. It's at 5.29% for Citibank.
Wow. A 5% yielder. 5-year average is 4%. So trading 130 basis points higher than that 5-year average. Similarly, Bank of America is 102 basis points higher. So both really showing some good value. Year to date, down 12.5%, down 6.66%. Ooh, 666. Don't like that.
Yeah. You know what I'm going to say. All my Iron Maiden fans out there. It doesn't come out often. Number of the beast. That's right.
So 2 bank stocks. Well, we're showing the metrics here on the screen, guys. Both show great results. They're the bigs. They're going to be around no matter what.
Yeah.
What are your thoughts about them? I know you own both.
Yeah, I do. I mean, I haven't really built the position in Bank of America. I've just kind of let it sit there. The one we've been building in my wife's account is the Citibank, and it's one where it's in the low 40s. I typically nibble on it. I'll add 2, 3, 4, 5 shares at a time. Maybe it just depends. So, I mean, the metrics, the earnings results, there's no reason why I shouldn't be adding to Citibank, quite frankly. So, I mean, I'd easily see me buying Bank of America. We'll see. But I can see arguments for both. What do you think, Lanny? You don't own either, right?
I don't own either. I mean, they're both great stocks. I own so many bank stocks right now. I'm gonna have to be hard watching them. And if you guys own any of these, feel free to add to both of them because I only see solid results going forward. Obviously, do your own research, but I'm saying these are 2 great stocks to buy right now.
Yeah, so let us know what you think of Bank of America and what you think of Citibank. Throw it down there in that comment section below. Or do you just prefer the GOAT, JP Morgan, too? That's also an acceptable answer here in this video.
Guys, definitely keep saving, keep investing, buy stocks when you can. Pay yourself first, get to financial freedom, and build that passive income stream, guys. And as Bert's chugging his water, there's one thing we got to tell you because you guys are either with us or you're against us. Jack, that was Bert, the Hurt, and Lanny from the Dividend Diplomats over and out.